If there was a Super Bowl for convenient nutrition brands, Premier Protein would be considered the Kansas City Chiefs of the category. So I'll provide everything you need to properly decode that introductory statement a bit later in this content, but on February 3rd of 2025, BellRing Brands updated the public markets by releasing its fiscal 2025 first quarter earnings report that covers the period ending December 31st of 2024. I'll be utilizing the financial information within those documents along with the notes I took while listening to the earnings conference call and any relevant publicly disclosed news to obviously update you on the recent performance of the brands in that functional CPG portfolio, but also use it as a backdrop to discuss market insights within the active nutrition formats of liquids and powders. But let's start off with a quick rundown of the BellRing Brands fiscal 2025 first quarter revenue numbers. BellRing Brands reported generating quarterly net sales of $532.9 million, amounting to an insane 23.8% year-over-year growth rate, which was comprised of a positive 20.8% volume increase and 3% increase in price and product mix. But if we're looking at performance sequentially, BellRing Brands saw its revenue decrease slightly over 4% quarter over quarter. If we examine quarterly sales by brand, Premier Protein was up 26.3% year over year. This came from a robust 21.4% volume increase and 4.9% increase in price and product mix. If we focus on just the Premier Protein RTDs, that product format saw net sales increase 25.3% year over year, driven by a similar ratio of both volume and price growth. Shifting to Dymatize Nutrition, the brand saw quarterly net sales increase 12.6% year over year. This result was driven by almost entirely volume growth and more specifically strength in the international channel. But let's jump into some quarterly insights. And as I normally do with these BellRing Brands content pieces, I'll dive deeper into the Premier Protein RTD beverages business activity initially, and then shift into examining the protein powders business activity for both Premier Protein and Dymatize. Overall, the RTD liquid subcategory of convenient nutrition has shown extremely strong growth during the 2020s compared to historical rates. And while Premier Protein has benefited greatly from that marketplace momentum, it has also faced its share of episodic challenges during that same period, from severe capacity constraints that limited available flavor variants and usage of trade promotions to even a voluntary product recall. But Premier Protein has been able to overcome each efficiently, as they are some of the best operators within the functional CPG space. In terms of retail consumption growth by channel, the largest for Premier Protein RTDs would be wholesale clubs, which was up 21.2% year over year during the quarter. But believe it or not, the brand's other major sales channels collectively blended up that wholesale club performance, with mass retail growing 20.2%, grocery up 33.7%, and e-commerce growing steeply at 48.2%. Overall, Premier Protein RTD's consumption trends for both tracked and untracked channels were up 23.4% year over year. Moreover, that strong quarterly performance essentially held the last 52-week consumption trend consistent to now just under positive 19%. And even with that substantial year-over-year retail consumption increase, strong RTD beverage production has allowed Premier Protein to again rebuild trade and company inventory levels. With that improvement in stock, along with increased distribution and new product launches, helping Premier Protein end the quarter with total distribution points reaching all-time highs. And then speaking of metrics reaching all-time highs, household penetration for the entire Premier Protein brand now sits at 20%. This recent household penetration growth for the brand is being fueled by the first national brand advertising campaign since 2021, titled Sweeten the Journey, and promotional activity restarting, with the latter variable bringing deal-seeking or value-oriented buyers back towards the Premier Protein brand. Moreover, it's important to note that Premier Protein does lead the entire convenient nutrition category in household penetration and outpaces the next RTD liquid subcategory competitor by more than a handful of percentage points. Premier Protein market share now sits at 25% of total RTD liquids category of convenient nutrition and should spike closer to 30% during fiscal second quarter's wholesale club promotions. With steady production across the full range of flavors, new product launches, and promotional activity returning, Premier Protein should see its market share climb even further towards consistent new all-time highs throughout fiscal 2025. But let's shift into examining the recent BellRing Brands business activity within ready-to-mix protein powders and a similar assortment of underlying drivers impacting the RTD liquid subcategory has created strong growth within the ready-to-mix powder subcategory of convenient nutrition. In fact, nutritional supplement powders have become mainstream, with category proliferation creating an environment where more consumers are purchasing both everyday and performance nutrition positioned protein products at large retailers. But that statement about protein powder shouldn't suggest that I believe the recent pattern of steep retail sales growth trajectory will last forever, because while I don't mind mixing up a protein shake, it would be silly to overlook the extra friction point for a lot of especially new to category mainstream consumers, thus causing what I believe will prove to be a lower household penetration ceiling compared to RTD protein beverages. But in stating that, I also don't think we're anywhere near that point of the commercial cycle just yet, even if ready-to-mix powders growth has slowed slightly compared to earlier this decade. Furthermore, it's important to acknowledge that the majority of convenient nutrition powder sales volume will continue occurring online, thus applying that same lower ceiling wouldn't necessarily apply within the multi-channel retail environment. But with BellRing Brands positioned strongly within both the performance and everyday consumer segments of convenient nutrition ready-to-mix powders, it has been benefiting twice from this marketplace tailwind. But let's stick with the Premier Protein theme and firstly break down the performance of that brand's protein powder SKUs. Premier Protein powders continue to perform strongly, with quarterly retail takeaway growth increasing slightly over 24% year over year, aided by distribution gains and strong velocities. Moreover, Premier Protein powders continue to bring new mainstream consumers into the category, with the brand generating quarterly retail takeaway growth at mass retailers up around 9%, e-commerce up 24%, and grocery performing the best at up just over 24%. While the recent strong quarterly performance still dragged down the annualized growth rates, BellRing Brands leadership restated their excitement about the opportunity emerging with Premier Protein powder SKUs, as they have proven to be both incremental to RTD shake sales and beneficial towards growing the brand's household penetration. And believe it or not, Premier Protein powders has already surpassed the Dymatize household penetration, though if we're being fair to Dymatize, that's not a like-for-like comparison, because Premier Protein is a much more well-known convenient nutrition brand overall that's more recently extended formats. On the other hand, the Dymatize brand is a lot narrower, focusing on the more sophisticated performance consumer that makes up about half of the protein powder dollar sales at large retail. But maybe this is a good time to transition into analyzing the most recent performance of the Dymatize protein powders. As mentioned earlier, categorical growth over the last handful of years within large retail channels has also greatly benefited those performance nutrition brands like Dymatize that were aligned from a sales channel strategy perspective. And this has helped Dymatize become a top-selling performance nutrition protein brand in almost every large retailer. Nevertheless, it would be hard to overlook that retail takeaway trends have been sliding in the last year, as Dymatize faces a much higher level and diversity of competitive threats across all sales channels. And this caused each different sales channel for Dymatize to have negative year-over-year retail takeaway growth in the first quarter of fiscal 2025. But overall, continuing marketplace tailwinds such as performance protein powders becoming more mainstream and overall category proliferation helped Dymatize sustain its total distribution points and all commodity volume percentage that has been hovering around all-time highs for the brand. Yet, I'm not sure that setup helps lessen the worries around what it might take strategically to get Dymatize back into consistent growth mode. So let's kind of talk a bit about those previously mentioned higher level and diversity of competitive threats across all sales channels. It's no secret that the Great Shutdown shifted categorical shopping behaviors that benefited e-commerce, wholesale clubs, grocery stores, and mass retailers. But even if that event happened only 5 years ago, performance nutrition powders stocked at these large retailers during that time frame was much smaller in merchandising scope and extent. So the sales channel strategy decisions made by Dymatize during the mid to late 2010s perfectly positioned the brand as a primary beneficiary of this shifted categorical shopping behavior. But what's happening now is that every challenger brand that was either too weak or poorly positioned during the Great Shutdown impacted timeframe has followed many of the previous Dymatize sales channel strategies. Moreover, these challenger brands like Ghost have a much stronger brand development focus and emotional connection with today's digital-first audience. Alternatively, a mixture of value-oriented shopping behavior, 2 cycles of commodity price inflation in the last 3 to 4 years, and consumption growth in protein powders has led retailers to prioritize private label creations within the category. And while BellRing Brands will say that Dymatize is a premium brand, thus not competitive with private label, I'd bet leadership is overestimating the power of this relatively bland legacy performance nutrition brand. In response to these elevated competitive threats, BellRing Brands has attempted to invest further into Dymatize brand marketing and restart product innovation. This would mark a full year of utilization of NFL star running back Christian McCaffrey, even though unfortunately for Dymatize, he was injured almost the entire season. And then Dymatize re-entered the pre-workout energy powder space with a much more, let's call it benign mainstream formula compared to previous categorical offerings of the sports nutrition brand. Finally, Dymatize launched a product innovation that I predicted within a May 2024 content piece. Leadership hinted that they were putting the final touches on innovation that will expand Dymatize's product line. What it is exactly? Well, if you follow me on LinkedIn, you would have seen an image where I included an unreleased rough render of an RTD protein beverage from Dymatize that will include its flavor license partnership with Pebbles cereal. I always say that demand growth breeds commercialization activity, and now that supply constraints are lessening in the product format, you should very much expect more competition is coming within performance nutrition brands in the RTD liquid subcategory. But with the Dymatize RTD protein beverages hitting the market just last month, we don't have much for strong feedback loops yet, though BellRing Brands leadership commented that the initial commercial results were positive and they're bullish around the long-term outlook. And while I think this time has a higher probability of success, I'd be remiss to not remind those in my audience that are less familiar with the Dymatize historical activity, as the sports nutrition brand has been in and out of the protein RTD beverages format for many years with low success. Next, let's quickly shift into an operational update, as this has been a volatile area over the years for BellRing Brands. The quarterly gross profit margin was 37.5% of net sales, which improved strongly 310 basis points year over year. This higher gross profit margin was driven mostly by improved pricing, but partly offset by net input cost inflation and incremental promotional activity. In terms of sequential quarter over quarter gross profit margin trends, BellRing Brands saw an improvement of 60 basis points. Additionally, BellRing Brands has been executing a multi-year Premier Protein plan, partnering with the biggest and most reputable players in the industry to make large CapEx investments, which has now given them a scalable, regionally diverse supply chain that should enable many years of robust growth. But for this final part of the content, I want to explain why I use that specific NFL analogy in the introductory statement. The most obvious connection would be that BellRing Brands' corporate headquarters is located within St. Louis, Missouri, and the Rams relocating almost a decade ago makes the Kansas City Chiefs the local team. But a more hidden connection would be that both brands have dominated their respective sports of late, and much like the Kansas City Chiefs are attempting to win their 3rd Super Bowl in a row, BellRing Brands, because of primarily Premier Protein, is hoping to reach its own version of a three-peat. If analyzing the trailing 12 months BellRing Brands activity, the brand portfolio has now successfully reached the $2 billion net sales milestone and is well on its way to reaching $3 billion in net sales. So why do I believe the Premier Protein Three-Peat is almost guaranteed at this point? Before even considering additional demand drivers, quick napkin math of kind of low double digits compounded annual growth rate will imply that Premier Protein would become a $3 billion brand by the end of fiscal 2029. Now, what could materially impact that 5-year revenue projection is a change in one of these predicted demand driving levers. The first would be that the current and future national brand marketing campaigns create excellent awareness that flows efficiently through to improve purchasing metrics. Moreover, BellRing Brands leadership leaked that for the first time in about a decade, Premier Protein will soon launch a refreshed packaging design and brand logo. And that obviously comes with inherent risk, but the word refresh and not overhaul was used, leaving less worry in my mind. The second demand driver would be geographical expansion, as convenient nutrition has become more popular globally, and contract manufacturing barriers to entry have lowered substantially for protein RTD beverages overseas. Thirdly, a change in distribution strategy with more DSD integration could not only unlock convenience channel opportunities, but also additional placements within large retailers selling singles in coolers. And that latter point about DSD would flow into Premier Protein, the convenient nutrition category leader, securing more store placements overall within retailers. With protein RTD beverages essentially becoming the fastest growing category within the entire food and beverage retailing space, expanded shelf space and store placements seem very likely during upcoming merchandising resets, thus creating massive opportunity for Premier Protein. Next, successful format or occasion innovation would be a huge help to the already impressive Premier Protein growth story. BellRing Brands has been kind of messing around with a few non-beverage Premier Protein formats through licensing partnerships, and while not a material impact to the business yet, licensing efforts in frozen breakfast items and cereal have provided key indicators that could prove Premier Protein has platform brand power that extends beyond the healthy living sets in retailers. And then beyond the fact that protein demand will increase overall, the final demand driver I want to mention is the second order effects from the increased GLP-1 medication penetration. This age of Ozempic variable has already been highlighted as a substantial share of the current Premier Protein growth story. And I don't see that stopping anytime soon, especially with GLP-1 oral delivery approval in the US market being a real possibility in 2026. But I hope you enjoyed the first principles thinking that went into my latest YouTube video. If you did, can you do me a favor by hitting that like button? That quick and free action helps YouTube know my content is worth spreading to more people. Also, we're getting really close to reaching my next subscriber goal, and it would be great if you join me on this journey. But to do that, we need to fix the fact that slightly more than 3/4 of you that are watching this video right now are not subscribed to my YouTube channel, and that hurts my feelings. Regardless, I want to thank you for giving me some of your attention and time, and I'll see you on the next one.